In this video, we will cover a strategy with Ichimoku on the gold symbol. And this strategy can be implemented in any market with high liquidity. And also, in the middle of the video, we will add a second indicator, Haimat, to our chart, which will greatly help us make better decisions. So without further ado, let's get to the strategy. But before that, by liking and subscribing to the channel, support your own channel. We set the time frame to 5 minutes, and sanani, although it can also be applied to other time frames. Next, we open the Indicators tab, Hami, and type Ichimoku in the search bar. Look friends, Hami, we need just this first indicator. So we click on it to open it on our chart. After this indicator opens on the chart, we don't need all these options. So we go into the indicator settings, enter the Style tab, and deactivate the options you see in the image. We only keep the check on these two options, which are the first option and span A. Next, we increase the thickness of the blue color and change the color of span A to white, also increasing its thickness. Then we proceed to the tab. We enter this put, and it is span, and the period is 26, which we change to 5, leaving the rest of the periods as default without altering them. After making these changes, we click OK. Thus, the blue line is our conversion line, and the white color is span A. When the blue line crosses the white line upwards, we are in an uptrend. And when the blue line crosses the white line downwards, we are in a downtrend. If we want to use this indicator alone, we might face some challenges. At this stage, we can use a second indicator, or draw some supply and demand lines on our chart based on our own knowledge to make decisions. Let's make better decisions. So moving forward, I open the Indicators tab and type MACD in the search bar. You see, friends, we need the first indicator, so we click on it to open it below the chart. After it opens on the chart, we need to make some changes. So I go into the settings of this indicator and enter the Style tab. Here I deactivate the checkboxes for MACD, Signal, and Zero line. Then I change the color of the first line to green, the next color to white, and the following one also to white. And I change the last color to red. Next, I go into the Input tab. Here, I change the fast period from 12 to 100 and the slow period, which is 26, to 200. I also change the signal smoothing, which is 9 to 14. After making these changes and clicking OK, if these histograms are green and above the zero level, it gives us a bullish signal. And if at any time the histograms are red and below the zero level, they indicate a bearish signal for us. Now, how can we use the combination of these indicators? Now, for a bearish trend, the first indicator that was Ichimoku should have a bearish cross. And then we look at the second indicator, which is MACD, and it should also confirm the bearish trend. Once the conditions are met, we can consider trading, and the opposite is true for a bullish trend. Now, sometimes we see that Ichimoku has issued a bullish signal for us, but the second indicator has not yet confirmed this signal. and confirms the timing of this signal for us, which practically has moved far from our entry range or entry point, disrupting our risk-reward ratio and leading to a loss. Therefore, and the signals that are important to us are those where both indicators point in the same direction for us, or the signals we see on the chart, like in these areas, where the Ichimoku indicator identifies a bullish cross and signal for us, but the MACD indicator does not confirm that bullish trend and is still showing a bearish trend for us. Therefore, the best signals, Xi, are valid when both are in the same direction. And even if they are in the same direction, but the risk of entering is much higher, we will completely disregard those signals. By following a series of tips, we can prevent our own losses. And we mentioned that when signals in the opposite direction form for us, we ignore those signals, like in these cases where the downward trend is confirmed for us, but the MACD indicator does not confirm this decline. We use this strategy on the symbol Teller or X used and set this frame to 5 minutes. I will also show you this strategy on another symbol so you can see that it can be applied to all symbols. So I open the indicator tab and type Ichimoku in the search bar. See friends, we need the second indicator more, which is Ichimoku, prepared by H. Potter. We click on it to open it on the chart for us. We don't need all the components of the Ichimoku. So to change some of its settings, we enter the settings of this indicator. And in the Input tab, we don't need to change the periods and leave them as default. Then we go to the Style tab and deactivate the options you see in the image. We also increase the opacity and thickness of this red color and do the same for this green color, increasing both its opacity and thickness. After making these changes, we click OK. In this strategy, we are concerned with the crosses that are created. For buy trades, our Tenkan line, which is red, must cross upwards and be positioned above the green line so that we can consider a buy trade. And conversely for sell trades, when our Tenkan, which we said is red, must cross downwards and be positioned below the green line, we can consider selling in these situations. However, one point to note is that it can be very important, and you can consider it, is that, for example, see here, this cross happened here, but we could have received this warning earlier. Now, how could we have realized it? Look, our Tenkan is moving along with the candles. And when we have an upward movement, the candles are placed on this line, and when the candles come below this line, it can be a warning for us. See here too, the candles came below this Tenkan line, but did not stabilize. But here it both stabilized, and the candles became stronger. With this method, you can receive warnings earlier. As soon as you see these signs, if you are already in a trade, you can exit the trade or make it risk-free. Or sometimes in range-bound areas, we will receive many signals. Preferably in TRs, we completely ignore the signals issued to us, and we can draw a box around this range and use the breakout and pull back to it from the other signals that this strategy and this indicator issue. Also, we are going to add a second indicator to my chart, but before introducing it, by overlaying and subscribing to the Persian Digital channel and activating the bell can help you get notified faster about the next strategies we cover. Very well, so next we open the Indicators tab and type QQE mod in the search bar. See friends, we need this very indicator first. We click on it so that it appears below the chart. To change a series of settings for this indicator, we enter its settings. In the Style tab, we don't need to change these settings and we leave it as the default. In the Input tab, we scroll down and find RSI Smoothing, which is set to 5. It is set to 5, which is the second one. We change this number from 5 to 30. We scroll down and here, again we have RSI Smoothing, which is also set to 5. We change this number to 30. After making these changes, we click on OK. This indicator consists of a single line or zero line and includes a series of histograms, as well as a white line, which is our QQE line. When these histograms are blue and above the zero line, they signal an upward trend for us. And when these histograms are pink or red and below this zero line, they indicate a downward trend. The way to use this strategy is very easy. For an upward trend, both indicators must have issued a buy signal, and then we can consider trading. Conversely, the same applies for a downward trend. We also need to consider many other parameters. It's not just with any signal that these indicators issue that we should enter a trade. For example, consider this point here. It has issued a sell signal for us. However, when we want to enter at these points, our risk to reward ratio becomes very high and it gets disrupted. Certainly, these trades will lead to losses. You also need to consider many other parameters and your own knowledge when making trades. Now, let's apply this strategy to another symbol. For example, look at the EUR-USD symbol. Friends, this strategy is also applicable to the EUR-USD symbol. You can easily achieve very good rewards from this strategy. As I mentioned, we are not supposed to make trades just by using these tools. We must also use our own knowledge to apply these strategies. I hope you use this strategy and have successful trades. We have also covered more strategies in the channel, so if you are interested in seeing more strategies, I suggest you don't miss the other videos. Until the next videos, I leave you in the care of the Almighty. May God protect you. Goodbye.